everything is crashing. This means real estate, this means businesses, employment, even inflation. Well, I have an email that I received today from a bank vice president. I want to address what this is saying because this is shocking. What is happening right now is completely shocking. Now, I expected this. I knew this was coming, but I didn't expect it was going to happen so soon. Now, before I explain what is really going on, I want to read you this email that I received. And the person is from a major bank, and you can hear from him exactly what is going on. Now, here's what he has to say. Adam, feel free to share this with your viewers as this is happening in all industries. I will not be divulging the name of the bank in which I work for obvious reasons. I'm sure you'll understand. However, I am the regional vice president of a bank, and I have some information you will want to hear. It is my unfortunate duty to manage operations for all of our retail branches in my region, and as of this morning, that is today, that is December 13th, he says we will be reducing bank staff, we are cutting management level and above bonuses, and we are laying off a large percentage of our lending department. Now, nothing that he has said in this email is good news. Nothing, right? Now, if you are an investor and you are investing in this bank, which essentially you could, yes, laying off employees, it makes the bank more profitable. So that would be good news. But outside of that, nothing's good news for the economy. And it just shows what's coming. But he goes on to say other things. And then he goes on to say this. I have been in banking for more than 30 years, and I have never seen anything like this. We are constantly suspending bank withdrawals due to liquidity issues. As borrowers pay down their credit cards, we have been closing their accounts to reduce our risk. And starting on January 3rd, we will be going after mortgage defaults that will rival 2008. That's what he says. Now, there was other things in between those two statements that he made, but it didn't really have much of an impact on what's going on. But I want to touch on a couple things really quick. First, he says that as of this morning, they will be reducing bank staff. I've heard this before from other people that have worked at the banks, and they said that they've been told that there will be layoffs. But the majority of people, the majority of banks are waiting until 2023, and then they will begin their layoffs. But you're probably thinking, well, why would a bank lay off employees? Why would they lay off, their bank staff? Don't they need them? Yeah, they do. But here's the issue. Banks make money by lending. That's the primary way a bank makes money, is by lending money to customers to buy a boat, to buy a car, to buy a home, right? To fund their business. Well, if interest rates keep on rising, you think people are wanting to go and get a new loan? No. I heard from a realtor friend of mine just this morning, and she had this to say, and I'll paraphrase this, but she was saying that this is one of the worst times she's ever seen to be a realtor. She was a realtor back in 2000, I think she started in 2006, 2007, somewhere around there. She said this is one of the worst times. And it's because of uncertainty. We don't know what's happening. She had a whole list of clients that were looking to buy a house. Now, nobody wants to buy a house. Nobody. There's new houses on the market. Nobody wants to buy. Now, the issue that she's having is she still has to pay for her office space, right? Because she's part of a brokerage. And she simply said that she is looking at pretty much getting out of the industry because she cannot afford her office space when her broker is actually going to raise the rate. They want more money. They want rent. Now, I don't know how this works. She never got back to me yet. But as a realtor, I know in some cases you pay, per month, you pay for your office space, right? In the brokerage. But I know for some people, they don't pay, but they get charged a higher commission, and it goes to the broker. So if you are a realtor out there, you know this, let me know down in the comment section below. What have you seen? Because she was saying she's considering leaving the industry because they're going to raise the rate. Interesting. But again, we're having troubles with lending at this time. But here's something else I want to touch on. And again, it doesn't matter if you're a realtor, you own a business, whatever. But when this person says he's been in banking for 30 years, has never seen anything like this. We've had a recession in the past 30 years. We've been in a recession, right? But he says we are constantly suspending bank withdrawals due to liquidity issues. That's a problem. And we've seen firsthand, I've talked about this here on the channel before, it's not a good situation to be in. You go to the bank and it's like, hey, could I take out $1,500? Sorry, no, we don't have $1,500. We can give you $200. No, I need $1,500. Sorry, come back tomorrow. We've seen that before. And again, I know people are like, well, I wish I had $200. Well, if you have money in the bank, no matter if it's $200 or if it's, 200,000, if you go to the bank and you want it, hopefully they'll be able to give it to you. I understand with 200,000, it's probably not possible, but if you call them ahead of time, like, I'm gonna come down 2 days, I need $200,000. Can you get that for me? I actually want it in hundreds. I don't want a wire transfer. I want it in hundreds. Hopefully they can get it for you, but we'll see. Here's the other thing. When borrowers pay down their credit cards, we have been closing their accounts to reduce our risk. I said this before, that when you have a high balance on a credit card, according to that financial department or that bank, whatever you want to call it, it's actually not as risky because you're already holding that balance. But when you pay it down and now there's much more money that they potentially don't have to pay out, that's where it becomes more risky. So the lower the amount of debt you hold, the riskier you become because you can go and just rack it up. And my guess is, and he didn't say, but my guess is that's the reason why. As people get close to paying it down, and I've had this happen to me before, I actually had a Walmart card. Walmart canceled it. And I use this thing constantly. I was always up at the max. And I don't know what the max was. I've had it years ago, but it was like $10,000, $20,000 or something was my limit. But I'd rack it up because I was buying stuff at Walmart to resell on Amazon. And so I'd rack this thing up, every single month. It would be right at the max. And then I'd go and pay it down and I'd use it again, right? And get the extra 2% or 3%, whatever it was back then. But there was one point where I got it down to it was probably down to like $2,000 or $3,000. And guess what? I get a notification in the mail. I get a letter in the mail from Walmart saying that they paid it off. Don't worry about it. They closed my account. I was too much of a risk. That's why. And so this is happening again. This happened back, if you remember, March, April, May 2020. Yeah, this happened. I know it happened because, again, happened to me, happened to a few people I know as well. But then when he says, and starting on January 3rd, now you're probably thinking, well, why January 3rd? Well, January 1st is a Sunday. So that means, January 2nd, which is a Monday, that's when banks or, federal banks are going to, celebrate this holiday. So most banks aren't going to be open until the Tuesday, January 3rd. But he says, starting January 3rd, we will be going after mortgage defaults that will rival 2008. Do you remember what happened back in 2008? I do. I remember because I was going to look at all these different foreclosures. I was looking into buying a house, a rental property, some investment property, and we ended up doing that. And so again, this was before 2008. When I was looking at buying. This was like 2006, 2007. But again, I remember looking for property back in 2008, right? 14 years ago. And he's saying that this what they're going to do is them going after mortgage defaults. This is going to rival 2008. I remember people were worried that they missed one payment. I'm a week late. I'm going to get foreclosed on. Well, that's not how it works. Banks are going to take a little bit more time than a week. Definitely take a lot more time. But I knew people that they didn't make a payment for almost 2 years. And then all of a sudden it came crashing down. And yeah, they lost their homes. But this is something that's happening. And you're probably thinking, well, is this going to affect me? Well, it is going to affect you, and it's going to affect you in a big way. When banks are laying off employees, or they're going after mortgage defaults, cutting bonuses, and who knows what else they're doing. This is just from one, what do you say? He was a vice president, a regional vice president. So who knows what else other banks are doing. But what's going on right now, they're simply trying to reduce their spending, trying to save money and increase cash. That's what they're doing. The problem with this is that most people assume the bank has the most cash laying around, when honestly the bank has some of the least amount of cash. They're very cash poor, and it's because they profit on lending. That's the key. They profit on lending. And if they are not lending money, they're not profitable. If they're not profitable, they're not making money. Well, people got to go. They got to change things up. So here's what I can tell you. The Federal Reserve is going to continue to raise rates. We're probably going to see this tomorrow. It'll probably be a 50 basis point rate hike. It could potentially be 25, it might be 75, but my best guess, based on all expectations from Wall Street, again, these are from professionals that do this for a living, get paid to do this. They are saying it is going to be a 50 basis point rate hike. Okay, so chances are we'll get a 50 basis point rate hike, which means rates continue to go up, means lending gets more expensive, and so there's a lot of stuff you got to consider. Sorry about that, forgot to turn off my phone, but there's a lot of things you got to consider here. But here's what you need to understand. If banks are pushed to their limit, they're not lending, they're not making money, guess what? We could potentially have another occurrence of Lehman Brothers or Bear Stearns. Yeah, that's what we could see. And banks completely crash and collapse. But again, everything right now is crashing. And we need to be prepared for this. And I've told you guys this before. Make sure you have some money sitting on the side, because at some point, you're going to need it. But that's what we know at this time. As always, thank you guys for watching. Consider subscribing. And I'll see you guys on the next one.